Nvidia, the renowned chipmaker, found itself in the spotlight recently for all the wrong reasons. The company, known for its cutting-edge technology and innovation, is now grappling with a significant challenge that could reshape its future. The company's stock took a tumble after the US government announced new licensing rules. These rules are part of a broader strategy to control the export of advanced technologies. These rules impact Nvidia's ability to sell its advanced chips in China, a market that has been crucial for its growth. The restrictions specifically target high-performance chips that are essential for various applications. The news sent shockwaves through the tech industry. Analysts and experts are now debating the long-term implications of these regulations. Investors were left wondering about the future of this industry giant. The uncertainty has led to a volatile market, with many stakeholders anxious about what comes next. The situation raises critical questions about the increasingly complex relationship between the US and China. This geopolitical tension is not just about trade, it's about technological supremacy and national security. It also highlights the growing importance of government regulation in the tech sector. Companies now have to navigate a labyrinth of rules and policies that can change overnight. The new rules specifically target Nvidia's H20 chips. These chips are at the forefront of high-performance computing and are integral to many advanced technologies. These chips are designed for high-performance computing, including artificial intelligence applications. AI is a rapidly growing field, and Nvidia's chips are among the best in the market. The US government is concerned that these chips could be used by China for military purposes. This adds a layer of national security to the already complex trade dynamics. This move is part of a broader effort by the US to limit China's access to advanced technologies. The aim is to maintain a technological edge over its global competitor. The situation has significant implications for both Nvidia and the wider tech industry. Companies are now re-evaluating their strategies and looking for ways to adapt. The new licensing rules represent a major challenge for Nvidia. The company is now at a crossroads, facing decisions that could define its future. The company generates a significant portion of its revenue from sales in China. Losing access to this market could be a severe blow to its financial health. The loss of this market could have a substantial impact on its bottom line. Nvidia will need to find new revenue streams to offset this loss. Nvidia is not alone in facing these challenges. Other tech giants are also feeling the pressure from these new regulations. Other US tech companies are also grappling with the implications of the US-China trade war. The entire industry is on edge, waiting to see how these tensions will unfold. The situation is still unfolding, and it remains to be seen how Nvidia will respond. The company's next moves will be closely watched by industry analysts and investors alike. The company has yet to issue a formal statement on the matter. Everyone is eagerly awaiting Nvidia's official response. However, it is likely that Nvidia will explore all available options to mitigate the impact of these new rules. The company has a history of resilience and innovation. This could include lobbying the US government for exemptions. Nvidia has the resources and influence to make its case heard. It could also mean seeking alternative markets for its products. Diversifying its market reach could help cushion the blow from the loss of Chinese sales. Whatever the outcome, the situation is a stark reminder of the geopolitical risks facing the tech industry. Companies must stay agile and prepared for rapid changes in the global landscape. At the heart of this trade dispute lies the H20 chip, a product specifically tailored for the Chinese market. Nvidia developed this chip to comply with existing US export regulations. These regulations restricted the sale of its most powerful chips to China. Despite these limitations, the H20 chip proved immensely popular in China. It quickly became a critical revenue source for Nvidia. The chip's design was a masterstroke, balancing performance and compliance in a way that few other products could. Designed for high-performance computing, the H20 chip found a home in various applications. From academic institutions conducting cutting-edge research to commercial enterprises seeking to optimize their operations, the H20 was versatile and reliable. These applications ranged from scientific research to powering large-scale data centers. The chip's adaptability made it a favorite among a wide range of users, each finding unique ways to leverage its capabilities. Its appeal stemmed from its ability to deliver substantial processing power. However, it still remained compliant with the export restrictions imposed by the US. This made it a popular choice for Chinese companies eager to leverage the power of advanced computing. The H20 chip's ability to navigate these regulatory waters without sacrificing performance was a key factor in its widespread adoption. The chip's popularity was further fueled by the burgeoning field of artificial intelligence. As AI technologies advanced, the demand for powerful yet compliant hardware grew, and the H20 chip was perfectly positioned to meet this need. The H20 found widespread adoption in AI applications, driving demand even higher. Industries ranging from healthcare to finance began to integrate AI solutions powered by the H20 chip, further cementing its role in the market. Chinese tech giants like Tencent, Alibaba, and ByteDance relied heavily on the H20. These companies used the chip to enhance their AI capabilities, enabling more sophisticated algorithms and faster processing times. They used it to power their AI models and cloud computing platforms. The H20 chip's efficiency and power made it an indispensable tool in their technological arsenal. The chip became integral to China's burgeoning AI industry, solidifying its importance in the market. Its role in driving innovation and supporting large-scale projects cannot be overstated. The H20 chip's success in China underscores the country's growing appetite for advanced technologies. As China continues to invest in tech, the demand for such high-performance chips is only expected to rise. It also highlights the challenges U.S. companies face in navigating the complex geopolitical landscape. Balancing innovation with compliance is a delicate act, fraught with uncertainties and risks. While Nvidia sought to comply with regulations, the new licensing rules demonstrate the unpredictable nature of such restrictions. Companies must remain agile and adaptable to survive in this ever-changing environment. The situation throws into question the long-term viability of developing specialized products for specific markets. As regulations shift, so too must the strategies of tech companies aiming to maintain their competitive edge. It raises concerns about the impact of geopolitical tensions on technological innovation and collaboration. The future of tech development may well depend on how these global dynamics evolve. The immediate impact of the new licensing rules was swift and severe for Nvidia. The company, known for its cutting-edge graphics processing units and AI technology, found itself in a precarious position almost overnight. The company announced it expects to incur charges of up to $5.5 billion in its fiscal first quarter of 2025. This staggering amount is a direct consequence of the sudden shift in regulatory landscape. These charges stem from inventory write-downs, purchase commitments, and reserves related to the H20 chips. The H20 chips, which were a significant part of Nvidia's product lineup, now face an uncertain future. This financial hit underscores the significant revenue Nvidia generated from its Chinese operations. China has been a major market for Nvidia, contributing substantially to its overall revenue. It also highlights the potential consequences of relying heavily on a single market, particularly one subject to geopolitical volatility. The geopolitical tensions between the US and China have been escalating, adding layers of complexity to Nvidia's business operations. News of the charges sent shockwaves through the stock market. Investors were quick to react, leading to a significant drop in Nvidia's stock price. Nvidia's shares plummeted over 5% in after-hours trading following the announcement. This decline reflects the market's immediate response to the financial uncertainty facing the company. Some reports indicated an even steeper drop of 6%. The volatility in Nvidia's stock is a clear indicator of investor anxiety. This negative market reaction reflects investor concern about the long-term impact of these licensing rules on Nvidia's profitability. The uncertainty surrounding future regulations adds to the apprehension. The uncertainty surrounding the situation and the potential for further restrictions contribute to this negative sentiment. Investors are wary of the ripple effects that could further destabilize Nvidia's financial standing. The $5.5 billion charges represent a significant blow to Nvidia's financial performance. This is not just a minor setback, it has the potential to alter the company's financial trajectory. While the company remains profitable, this setback will undoubtedly impact its bottom line. The long-term effects of these charges will be closely monitored by both investors and analysts. It also raises questions about Nvidia's ability to meet its financial targets. The company will need to reassess its strategies and possibly revise its financial goals. Analysts are likely to revise their earnings estimates for the company. This could lead to a more conservative outlook on Nvidia's future performance. This could further impact Nvidia's stock price in the short term. The market will be closely watching Nvidia's next moves. The financial fallout from these licensing rules extends beyond Nvidia. Other tech companies are also feeling the pressure. The situation serves as a cautionary tale for other US tech companies operating in China. It highlights the risks of over-reliance on a single market. It underscores the importance of diversifying revenue streams and reducing reliance on a single market. Companies are now more aware of the need to spread their risks. The incident also highlights the need for contingency plans to mitigate the impact of geopolitical risks. Businesses must be prepared for sudden changes in the regulatory environment. This event could prompt other companies to re-evaluate their strategies in China. They may look for ways to reduce their exposure to potential disruptions. The lessons learned from Nvidia's experience will likely influence corporate strategies for years to come. So, what exactly are US export controls? Well, these are regulations that restrict the export of certain technologies and products to foreign countries. They aim to protect national security and prevent sensitive technologies from falling into the wrong hands. For companies like Nvidia, these controls can significantly impact their ability to do business internationally, especially with countries like China. Nvidia isn't just dealing with regulatory challenges these days. The competitive landscape is also heating up rapidly. Rivals like AMD and Intel are making significant strides in the GPU market. Additionally, emerging players from other regions are starting to gain traction. This increased competition means that Nvidia has to continually innovate to maintain its market leadership position. In response to these challenges, Nvidia has been strategically pivoting. They are diversifying their product portfolio and investing heavily in AI and data center technologies. This shift aims to reduce dependency on any single market and open up new revenue streams. It's a bold move, but one that could pay off in the long run. The implications of these developments are far-reaching. For Nvidia, navigating these challenges successfully will determine their future growth and stability. For the tech landscape as a whole, it could lead to shifts in market dynamics and innovation patterns. Ultimately, how Nvidia adapts will be a key indicator of the industry's direction in the coming years.